Joining me is Christophe De Vusser. He is the head of EMEA private equity at Bain Company. I said Bain Capital earlier. I meant Bain Company, the advisor who put out really the report that I think everyone's going to be talking about with Harvard professor Josh Lerner at this conference, saying that, or at least a lot of people have taken from it, that if you invested in the S&P 500 over the last 10 years, you would have made more money than investing in private equity through June of 2019. So are public markets a better bet than private equity?
Well, it's factually right that for the first time in history on a 10-year stretch, the American public equities have outperformed the US private equity market. And that's the first time that has happened. And so it's logical that people are wondering, is private equity actually worth the hype and the fees that is out there? And we believe actually that the public equities come out of an incredible bull ride over the last years, and that public equities might actually return to their normal levels if there's a recession, if there's a market correction, etc. And that the private equity returns will continue to deliver healthy double-digit returns also over the coming years. And that's what we see investors also focusing on. They continue to put money behind private equity because they believe in the returns on the longer term, that they will be able to post double-digit returns. And so as such, 2019 was a record year for fundraising for private equity.
Yeah, we saw, I think, almost $400 billion go into private equity, almost $1 trillion go into private assets, including real estate. And what do investors expect out of private equity, out of private assets in a downturn that will make them better off than public markets?
Yeah, if you look over a 20-30 year period, private equity has done remarkably well during downturns. So we often say that actually during recession it's the best moment to invest in private equity, because it's in those moments that the private equity markets outperform the public equity markets most. And so if there's a dislocation, if there's a crisis somewhere, typically it's good moments to invest in the private equity markets. They have been incredibly resilient during crisis. Also during the last global financial crisis, private equity still returned 1.4 times their money, even in the worst crisis that we've seen over the last 10 years.
So the problem is, as I would see it, if everybody thinks this and they all put their money into private equity, they're all chasing the same assets, right? And then leverage just, I mean, your report shows leverage just goes through the roof. We're at a place now with leverage debt that we have never seen before.
Yeah, that's one of the challenges, of course. There's an incredible amount of dry powder out there, $2.5 trillion in the private capital dry powder that's out there that needs to be put to work. And
that's just capital that is sitting there that needs to be deployed, looking for companies to buy.
Yeah, and that drives prices up. And that's one of the challenges of private equity. That being said, 70% of that dry powder is what we call fresh. So it's just raised in the last 2 years. And also if you look into the money that's put to work every year, that dry powder is worth 2.5 years of investment. So there's a lot of money out there, the prices are high, and so private equity firms need to be cautious on how they put that to work. For sure also in a world that is disrupted by digital. And so it requires very smart strategies of private equity funds to look for the right targets, to know how they're going to create value, to continue to post these healthy returns.
Is Europe a good place to look for value because valuations are so high in the US, or is the negative interest rate scenario here more of a problem?
Yeah, private equity has done remarkably well in Europe. It continues to outperform the public equity markets as it has done over the last 10-20 years. And for sure, private versus public equity in Europe is a good choice. And private equity continues to post similar returns in Europe as it does actually in the US, healthy double-digit over a long time period. So private equity versus public equity for sure in Europe is a good choice, yes.
Is the negative rate, are negative rates a help for private equity because you can leverage up cheaper, or is it a problem because everybody leverages up cheaper?
Everybody leverages up cheaper, and it's a big part of why prices are inflating, because with the current interest rates you can put more debt on the same company, and that's actually a big part of why the multiples are being pushed up as well. So it's a good thing because you can put more leverage. It's a risky thing because prices are inflating because of it. And it's actually one of the risks if in the long term interest rates would start rising again. That would be a good challenge for the private equity market.